Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, looking forward to doing this video all day today, looking at Canadian MJ. We're going to look at MJ, the ETF, WED, APH, ACB, MJN, and we'll look at some correlations. So you might be saying, why would I be excited to do this video? I was looking bearish in my last video, and today was a big bull day. It's days like today that keep me excited to be a trader. It's days like today that have all the pieces coming together in terms of psychology, what was going on. So I'm going to break down what I saw going on and all the little factors at play here, in my opinion, because something that I'll do, well, first we'll set the stage on heading into today, what we were looking at. And of course, the video over the weekend will do that to a degree as well. But just to get a refresher, we were heading into today with SPY still in a no trade zone for me, where we have our low of the pullback, our high of the bounce, higher low, lower high, and we were within this tightening equilibrium pattern. And that's where we closed at the low of the day on Friday. So we had a bearish close. APH and ACB on the daily time frame had both already broken bearish. They had lost their higher low pattern. So again, same equilibrium pattern, but with a bear break from APH and ACB. Same thing, equilibrium pattern that had a bear break on Friday. So the setup was bear break on 2 out of the 3 big 3 on the daily chart. WEED close at the low of the day. All momentum heading to the downside, looking for WEED to follow ACB and APH with a bear break as well. And shorts were out in force. MJ, the ETF for the sector, I could not short any shares through Fidelity on Friday. That's the first time that has happened. Other times there's been 100,000 shares available to short, and in this time there was none. So that tells me there's a lot of shorts in positions, and that tells me that the market is all looking downside. That's what all the technical analysis said. So, as we know, one thing that technical analysis cannot account for is news. This is a reason that I love being a day trader, because I'm all cash overnight, and I don't have to worry about events taking place when my hands are tied. There's nothing I hate more than not being able to react. Again, technical analysis for me is about reacting to things, and if I'm unable to react to developments, and if I were short overnight and then we see a higher open, that loss that I'm going to eat is probably going to be higher than if it occurred during the regular trading day and I had my proper risk to reward ratios figured out and my stop losses triggered. So fortunately for me, I wasn't in any bearish positions when we saw the bulls show up today, but today was a classic short squeeze, and it was fueled by the news article on WEED that came out early this morning. If this news article came out on Thursday, in my opinion, we would not be seeing anywhere near as much of a bullish reaction. Now, how does that make any sense, you might be wondering? Well, you have to think of the setup. Again, a short squeeze occurred. So we trapped a lot of bears. Everybody, analysts, were all looking bearish, and all the momentum was looking bearish. So for us to see a higher open and then to see bullish action follow it, it's going to cause shorts to cover their positions, which they have to do buying, market orders. If we're seeing a bullish uptrend, they're going to be covering their shares with market orders most likely and adding to the bullish momentum. So when you see how we started this morning today on the 5-minute time frame, again, this is just the correlation to SPY. It was definitely correlated this morning, a little pullback, bullish continuation, and follow through. And that was another setup where the S&P 500 closed Friday with a bearish reversal candlestick. We're looking for healthy daily consolidation, and we started this morning not getting that follow through. By the end of the day, here's the S&P 500. We did see further consolidation, but you can see the WEED bulls definitely saw this correlation, but it favored the bulls significantly because it was not nearly as significant of a pullback. But you can see definitely correlated the entire day to a certain degree. And it just strengthened, or I should say that correlation was strong at some points and then weakened, but overall, it had a major effect overall. So that's also important to note. We did not see the bearish follow through that the S&P 500 was looking for first thing. That came at the end of the day. But look at the start of this morning, and let me get rid of these lines here. Let's just look here on the 5. So the start of this morning on the 5-minute time frame, this isn't the kind of news reaction like, when we had the, Constellation When that news came out, everybody's rushing to buy in first thing at the open. That didn't happen here. We had the bulls with a higher open. They bought in. But then look at the trading. We had a half an hour, more than that. We had 45 minutes of sideways trading with nothing going on. In my opinion, again, it's not this news. The news definitely was a catalyst for this short squeeze, but it's not the details of this news that is leading to this bullish reaction. It's just the timing and the entire psychological setup of the market at the time the article came out. So you have to think, again, whenever I'm in doing my analysis, I'm looking at it from a bull perspective and from a bear perspective. And I can say to myself, okay, if I'm in a bearish position and we see WEED see this open in the $27 range, that's doing nothing on this daily time frame to change the tight range that we're in. Anything under 28.50 was just a lower high on this daily time frame. So at the open, if I were in a bearish position, I would say, all right, that's not what I was hoping for. It's unfortunate that we're seeing a higher open, but I'm sticking with my bearish position because, again, nothing is changing on this daily time frame. The first signal for the bulls was a break of this equilibrium pattern. Again, low, high, higher low, lower high, higher low, bull break. So that was the first signal. And you have to figure that not only is that going to lead to bulls buying the new high of the day, that's going to lead to shorts covering. Shorts are going to say, okay, we have a new high of the day. The bulls do have momentum. I'm exiting my position. Then we had another key break of 28.50 resistance, and that's the resistance I just highlighted on the daily. Here's that candlestick breaking it. Big volume spike occurred, and we broke that resistance. So that's another example where we had another wave of shorts saying, that's the level that I was looking for to hold and be a lower high. That's now broken. I need to cover my position. And again, bulls bought the 28.50 break. So you have bulls buying and shorts covering at the same time, pushing that momentum. We had another bull break towards the end of the day. 29.50 broke. 29.50 was a lower high here on the daily, and now the key resistance on the daily is 31.35. But the point behind how this played out and how it was more slow and steady and not just a rocket ship first thing at the open is it allowed for an analogy that I would use is imagine you're driving a car and you got a turbo booster and you can use that turbo booster up. It's the difference between using the turbo booster all at the start of the race or using the turbo booster intermittently throughout the race at key levels that are difficult. So every time we approach a key resistance, the bulls breaking that resistance and then the short covering that follows it is just another push forward and keeps this move going. So where we stand on the hourly time frame right now heading into tomorrow, we established a base of support. So there is a new key hourly support level to be looking at. And this is a good sign for the bulls just because they don't want to head into tomorrow with all green hours and no higher low established. This is a good sign, the fact that we established a higher low at 28.88. 28.88 is the must-hold level tomorrow morning. And, of course, the bulls want to see a break of $30 first thing. If this daily chart can see a break of 31.35, it is a complete turnaround and save by the bulls. As far as I'm concerned, this little news reaction and this psychology of the market has the potential for WEED to save the Canadian MJ sector from clear bearish follow-through. If WEED this week can break 31.35, it will be very significant. We'll get a bullish MACD cross on the daily. The bounce, remember the bounce from the oversold dump, high, higher low, equilibrium, breaking bullish. And now if we see the follow-through and break the high of the bounce, it will be significant for this follow-through, and it will completely shift the chart. Again, if we had made a bear break this morning of 26.12 and then 25.23, we would be in a completely different scenario than where we're at right now. And it's the fact that we didn't break bearish on Friday, and it's the fact that this news came out and squeezed some shorts and caught some shorts that have us where we sit right now. I'm currently in a WEED position. I entered on the 5-minute time frame when we saw a bull flag of consolidation forming right here. And I said to myself, all right, I'm entering a position right here, and I will exit if the low of consolidation breaks. It never broke. We bounced off of it a couple times, and I'm in that position heading into tomorrow. I was going to add at the end of the day, if we saw a significant enough close, I wanted to see a close above 29.80 to see that normal load up at the end of the day, bull momentum, and then see the higher gap up open. But where we stand right now, we're going to be looking for an open right around $30. If we can open above $30, that'll be a great sign because that'll give us the higher high right away in terms of continuation of this candlestick. And let's get this volume up here. Not sure where that volume went, but the volume is definitely favoring the bulls right now, where we have our increase in bull volume. It's the highest volume we've seen since we started getting real tight here the last 6 days. Again, complete turnaround on this daily chart. And not really, it didn't really necessarily need a complete turnaround because it never broke bearish. But because it did break bullish here, it's saving APH and ACB. The correlation is picking up there. And let's compare. Obviously, the percentage gains favoring WEED, which is why that's where my interest is. due to the short squeeze. But let's start with MJ. So let's go through the normal analysis now. That's the psychology of what I feel happened and why, again, if you put that news release out Thursday, in my opinion, we don't see anywhere near the same amount of strength that we saw because we didn't have all the bears enter their positions and all the shorts get into their positions before heading into this week. So MJ is still a higher low pattern on the daily time frame, and it too is still in a bit of an equilibrium where we have our low, our high of the bounce. We've got our higher low, which never broke, a lower high just barely, and now another higher low is trying to form. The key range for me, 32.20 to 33.73. A break of 33.73 will be significant, and that will mean that WEED has broken 31.35 in my opinion, as that will be the break of the high of the bounce and get some follow through. Remember the weekly time frames. The weekly time frames all formed inside bars last week, and they are all remaining inside bars at this point. So inside bar last week, inside bar this week, things are tightening up, and we're looking for a clear break. If not this week, if we do form inside bars again this week, we will certainly see a bull, or I shouldn't say a bull break. We will see a break, whether bullish or bearish, next week. So inside bar, clear levels to be watching, and it's all about whether we can see some continuation into tomorrow. WEED, clear bull break on the daily, all about 31.35 resistance, bull MAC decross trying to follow through. It too, inside bar, bull break actually, so a very significant bull break for WEED, and APH and ACB are not nearly as close to a bull break, just showing again why WEED right now is the lead bull out of the major names in the sector. So APH, daily time frame, we had a clear bear break. And right now, this daily chart is still lower highs, so do not lose sight of that. WEED broke the lower high pattern today. APH has not done that yet. I've got top of the bounce, lower high. You could even call in here another little lower high, 18, or I should say 1586. And now we're still in the midst of this bull move, but as far as I'm concerned on this daily chart, anything under 18 or 1679 is a lower high. That's where we saw the bulls form a higher low. They made a bounce attempt and they rejected. That's the most recent lower high. We can get up here and see follow through and get to 1650. But if we pull back, that's still a lower high, in my opinion, on this daily chart. So just comparing the big three on the daily chart, it is going to take a lot more bullish work for ACB and APH to turn around momentum in their favor than it is for WEED. And again, it's because we never broke bearish on WEED. So it is one big step ahead of these other two names. So checking the weekly time frame, inside bar, held that low first thing today, 1377. We bounced off that support by 9 cents, and we are forming a second inside bar on the weekly time frame. And that's the goal for the bulls. You can see to break bullish like WEED did, we'd have to get up to 1679, which we're not close to doing at this point. ACB is the same story, a little bit more of a significant follow through on the bounce in terms of the recovery. The bull volume certainly in favor, but anything under 1171 is a lower high as far as I'm concerned. Weekly inside bar, we held the low of 996 at the open, and an inside bar is forming. We'd have to break 1171 to break the lower high pattern and to break the weekly inside bar bullish. So again, just looking at the weekly charts, it shows you very clearly WEED ahead of the game. MJN on the daily time frame, still slightly favoring the bulls. Hasn't made a bull break like WEED, but it hasn't made a bear break either. So we have our low of the dump, and we have our high of the bounce. Higher low, I'm calling 866. Lower high is $10. And the bulls trying to form another higher low at 901. So I'm watching 901 and $10. We're close to the middle of that range. It still favors the bears a little bit because we're at 935. The weekly time frame inside bar is still intact. We held the low of last week by 1 penny this morning, and we need to see a break of $10 to see that bull break of the lower high pattern and to see the inside bar on the weekly time frame break bullish. So that's where we stand with all of the major names in the sector. Very significant day. Congrats to the bulls. Bulls that bought early had huge gains. I waited a little bit for some proving of breaking resistances to initiate my position. And if we see that follow through and break $30 tomorrow, it's going to be a good sign for WEED and the sector. Again, don't lose sight that we are still forming lower highs on APH and ACB, and it's going to require further benefit from sector correlation in order for the bulls of those two names to regain momentum in their favor on the daily chart. Also, we cannot forget the S&P 500. It's going to have a significant impact in the short term, in my opinion, as to what kind of follow through we can get. So for SPY on the hourly time frame, we're in consolidation mode with lower highs and lower lows. And I'm going to put out a market video later that we can keep, you can check out if you're interested in what the market outlook is. We are looking for a healthy daily higher low on SPY. After the big 6-day bull move and break of lower highs, we are looking for a higher low to form. And at this point, it's healthy consolidation. You look at the hourly chart, considering where we came from, this is very contained, healthy consolidation. No big red flags at this point. So the bulls, the sooner the bulls show up on the daily chart for the S&P 500 and form a bullish reversal candlestick and a higher low, the better that will be for the Canadian MJ sector, as that can only benefit the bulls rather than, you know, continued consolidation potentially hurting the bulls like it did here at the end of the day, where, you know, if we didn't dump here on SPY in the last 2 hours of trading, in my opinion, we would have seen that high of the day close in this sector. So I appreciate you watching. Again, technical analysis can't account for news. We're going to be wrong plenty of times. The setup was all pointing bearish and it had a complete turnaround. And because the setup was all pointing bearish and we had that complete turnaround, that's why we saw the short squeeze and the amount of strength follow through today. So I appreciate you all watching. We'll see if we can get this follow through tomorrow. I will likely sell my position if we cannot break $30 in the first half of trading and we start to fall back and break 29, or it's actually 28.86 is the key support on WEED. If we can't break 30 and we break 28.86, that shows the bulls losing a lot of momentum. So keep an eye out for that as well.